Mike Tedeschi, Wealth Management Advisor at Perspective Wealth Planning with this week's market breakdown video. As always, if you like this content, please subscribe to our channel so you can see it on a weekly basis. We are going to take a look at the four major U.S. indexes, and we are also going to take a look at how seasonality impacts us at this time of the year into the end of the year and what that could mean for us moving forward. And we are also going to take a look at the move out of the precious metals market this week. Let's jump right into it here, and let's start with the Nasdaq. We continue to watch the Nasdaq being the leader. This week, we did not make a new high. We pushed right up into that zone and fell back a little bit. We are clearly over that support zone of 10,400. And what we're watching for now is we're looking for a break over that 11,070 zone to new all-time highs, or a move back under that 10,400 level. If we were to fall back down, our next level of support is the zone that we talked about before, which is that 9,700 level. Next, let's take a look at the S&P 500 here. Now, the S&P 500 did make a break above June's high this week and continues to push higher, which really puts our next target in play at that 3330 zone, which is this gap area from the breakdown in February. So we are going to watch what happens up here. A push above that would target the all-time highs, and that would be the last resistance zone before ultimately we have open skies ahead. If we were to fall back below here, once again, we're looking at that 3140 zone and then about that 3000 level as our two supports to the downside. Now, when I come in and take a look at the Dow, what you're going to see here is you're going to see we clearly are not above those June highs. So the Dow has been weaker, and we have talked about that lately. In fact, it is still pushing right on that gap down from mid-June, and we need to get back up above that. And really what the bulls want to see out of the Dow is to take out those June highs and head back up to its gap, which is around that 29,000 level. And the other index, which of course has been the laggard, and we've talked about this many, many times, is the Russell. The Russell is well off of those June highs as well. And we continue to talk about those 50s as the key inside the Russell. So 1550 is that next resistance zone. That's the June high. 1450 is that middle of the zone. And you can see we did break above that last week on a really good push when the Nasdaq was actually red. So it looked like we might have a little bit of rotation down, but we haven't really had a very strong follow through here this week. And then our major support falls in at that 1350 level. Now, let's take a look in at seasonality. You may have heard that saying, sell in May and go away. Well, in May, on this chart, you can see seasonality. We typically tend to fall back down a little bit historically there in June. But when we get to July, we're basically right back to where we were in May historically on this chart. And then we head into the toughest portion of the year in terms of seasonality, which is that July, August, and September, usually where we end up bottoming out. And then we have that nice run into the end of the year historically. Now, remember, seasonality is just taking a look at all of the previous seasons and plotting it in terms of what historically on average happens. It doesn't mean that's how this year is going to play out, but it's just a tool that we can look for when certain times of the year are more difficult for certain indexes. And so when we take a look at the seasonality here, we are headed into, again, the roughest portion of the year. And if we actually take a look at the data set behind this, we're looking at when the S&P turns positive for the year of greater than 0.75% after being negative for a while, and what that does in the short term. And if we actually look at this data set, it is rough when this happens in that July and August timeframe for the next 3 months. The numbers are not really good. 6 months and a year later, of course, those numbers do look a lot better. So basically, if we can get through the next 3 months on a historical standpoint, right, the end of that year, the next 3 months, the next 6 months after that, subsequently have a positive slant. So that's really what we're looking at here as we head into the tough seasonality time of the year and the market just starting to get positive for the year after being negative for so long at this point in the year. It typically has led to some difficult times over the next few months. So we want to keep that in mind. When we talk about things getting a little bit difficult in the indexes, one of the things we always like to take a look at is where might some of those safe haven places be. And one of the things that always pops into mind, of course, is precious metals. This is the monthly chart of gold. If the month were to end today, this would be the highest monthly close in gold in the US dollar in history. And if we look at this on a daily time frame, we had a nice breakout here this week over that 1830 zone and continued to push up nearing that $1,900 an ounce zone. Highest price ever recorded there in gold and US dollars, $1,923.70. So this has been, and we've talked about this many times over the last year, an extremely explosive move after a very long base base here in gold, and we continue to see that strength on this breakout, and it continues to push higher and is broken through this 1800 major resistance zone. So as long as we hold up above here, we certainly have those all-time highs within our sights. And if we can get above that, that would continue to be extremely, extremely bullish. Remember, the last time we saw a really long base like this and a breakout, we saw gold run for a number of years, 1, 2, 3, 4, 5, 6, 7 years of bull market in gold before it ultimately soured a little bit. So, we're really basically in the second year from this breakout right here. So we could have a lot of time and a lot of length for this zone to run. When we take a look at gold, we also want to take a look at sister metal silver, and silver finally got off its horse and has started to go. Silver's made the highest price that it has had since 2014 here, and if we look at this on a daily basis, when we broke over that 21 level, we have subsequently flown on some pretty good volume there. Now, silver has a lot more to run and a lot of overhead resistance. We start running into that overhead resistance around that 26 zone. Then our next level is in at 35 before really we're running back up towards into those 40s before that next resistance zone. So really strong move here over the last week or two, really starting to outperform gold, and the gold to silver ratio had been at 120, meaning 120 ounces of silver to buy 1 ounce of gold. That's fallen more into the 80 range. Historically, that's still down more, I think 68 or 70 in that zone. So silver has a little bit more to play catch up in terms of how many ounces of silver will buy an ounce of gold if it wants to get back to that historical norm. Now, the other one I wanted to take a look at for you guys as well, we'll take a look at platinum. Platinum has had a strong move here over the last few sessions as well. Let me zoom in on a daily time frame. You can see we went from about 800 an ounce almost back up to that $1,000 zone, but it really has a lot to prove in terms of getting back over a key level. I would be watching that 1,030 zone. If it can get up above that, I would be then looking at that 1,200 to 1,330 as that next resistance, and then you've got 1,550 and 1,740. There is a lot of overhead resistance areas on platinum. It has been a big lagger here over the last 10, 15 years or so. But you can see it was much higher than the actual price of gold's high a number of years back. So if it does want to play catch up, there is, again, that potential for it to really make a move. But we've got to get over this major resistance zone here of 1,030 before we could even start to think about that happening. Takeaways from today's video, guys: we head into a tougher season of the year, which historically has given us trouble over the next couple of months. So we're going to continue to pay very close attention to what the indexes are doing. And we do have breakouts in some safety names like gold. So we're going to continue to see if we have money flow in there. As always, if you guys like these videos, please subscribe to our channel. You can also reach out to me directly at Tedeschi at Perspective Wealth Planning, or you can give me a call at 814-580-9881. I'd be more than happy to talk to you about anything related to the markets. I hope you guys have yourselves a fantastic week. As always, I'll see you next week.